Reckitt Benckiser Group plc is one of the top 20 largest stocks in the FTSE 100, and after looking at their financials, guys, I honestly don't know why. This is the first video of its kind on my channel, because normally I tell you guys all about stocks that I can see flourishing in the near future, but with this stock right here, roles have actually reversed, guys. So I'll be going through this stock with a fine comb, explaining my reasoning behind why I can actually see it going down instead. So this might be a perfect opportunity for you guys to short sell this stock. And if you guys want me to look at any other stocks, whether they're good or whether they're bad, then let me know down in the comment box below, guys. Nonetheless, I hope you like where this video is going. If so, make sure to smash that like button, share this video too, and subscribe with the notification bell on as well. Right, if you were to ask most people who are Reckitt Benckiser Group plc, you'll probably get no response. But if you were to show those same people some of their products, now chances are they've used their product at least once in the last year. As you guys can probably tell, Reckitt Benckiser Group plc have some big time products in the hygiene, health and nutrition industry. These are big markets to get into, guys, because there's always going to be a demand for these type of products, especially during this current pandemic, you know, where the standard of hygiene has been the highest it's ever been at, guys. This is always a good starting point for this stock. However, how does this all fare for Reckitt Benckiser Group plc in the stock exchange? Now that's the question to ask. Because when you look at them in the London Stock Exchange with the ticker symbol RB.L, you'll notice that this stock at this time of recording has a share price of £65 per share, guys. This is expensive, especially when you look at the P ratio is currently right now N/A, non-applicable, which basically means that they're currently making a loss, guys. This stock seems severely overrated for the price that it's at. And it's showing in the share price, guys, because the share price has been plummeting since summer 2020. But before I give you guys my full verdict, let's see what the financials are saying. Beginning with the income statement, because from a service level, this stock seems to be doing all the right things, guys. You know, the revenues and the profits have been increasing throughout the years, which is always a good sign to see, especially with the trailing 12 months, the TTM, giving the highest figures amongst the lot. But this is why I can't stress enough, guys, how important it is to focus on the net profit / net income, because this shows you, after all of their expenses, after all of their taxes, how much profit Reckitt Benckiser Group plc is left with at the end of the day. It's the true profit for this stock. As you can see, this stock has made a loss, and it's not just for the trailing 12 months. They did it last year too. This stock seems like it's on a decline. But let's see what the balance sheet has to say about all of this. And it doesn't get much better for the balance sheet either, guys, because the current assets are unable to cover the current liabilities, heavily implying that this stock is over leveraged. And when you do look at the non-current assets, they do seem as though they can make up for where the current assets fell short, but this is very deceptive. And it's because of this section right here, guys, the goodwill and intangible assets. Whenever I look at investing in stocks, I don't want to see any sizable amount of money in this section right here, because it gives that stock the opportunity to distort the balance sheet, making it look better than what it really is. So when you add up these two figures, guys, it accumulates to £24.3 billion, guys. And when you subtract it from the stockholders' equity, this changes from 9.4 billion to now negative 14.9 billion pounds. Reckitt Benckiser Group plc do not have enough assets to cover their liabilities. This is a big problem, guys. But let's see whether the cash flow statement can save this stock from falling down even further. And to my surprise, guys, the cash flow statement is fairly reasonable. Yes, you can say that the operating activities has taken a big hit this year compared to last year, but it's still positive, which shows that this stock, its daily operations, is still making them money at the end of the day. And when you look at the net investment activities, this is also negative, guys, which is a good look to have because it shows their willingness and desire to want to grow and expand the business further. And it's a similar sort of thing for the net financing activities, which shows their willingness to want to pay debtors and investors back. All of this has resulted in a positive net change, which is much better than negative net change. But what I will say though is considerably less than what I would expect for a stock of its size. The most alarming point though is the free cash flow available. This figure shows the amount of cash flow that the stock has at repaying its creditors, paying out dividends and interest to investors. So with it now being halved compared to what it was previously, guys, this can have a knock-on effect on the share price, because guess what, now this can start to affect stock market investors' pockets. It can affect the dividends that we receive each and every year from this stock, hence reducing the credibility of this stock. This does not paint a good picture for Reckitt Benckiser Group PLC. Altogether, I think this stock is on a severe decline. Not only are they making a loss, guys, but they don't have enough cash in hand to keep them ticking over until things start to look brighter again. This is a big worry. In my opinion, I think there are better stocks out there to invest in. But let me know what you guys think down in the comment box below. Before I wrap things up, could you guys do me a big favor? Could you smash that like button, share this video too, and subscribe with the notification bell on as well. It's you guys doing these things here that let me know that I'm doing a good job out there. So make sure to do that, guys. It's your favorite YouTuber, DSL Finance, sharing my thoughts and my experiences with you guys every Sunday at 3 PM. Have a great day, people. Bye. Whoa.